So when you're going through this too, when you're talking about HO5s, HO3s, we're talking about what's covered, what's not. I don't, now recently I went through a home insurance claim, and I've been through one many years ago. When I was reaching out to my agent though, and sadly my agent couldn't even tell me this. How does the deductible actually work on a home insurance policy?
Simply the way a deductible works is let's talk about that too in terms of actual cash value and replacement costs. Because one thing you want to make sure you get with a home insurance policy, and even with a renter's insurance policy as well, is replacement cost coverage. That way, if you have a loss, you can go out and get something new to replace it. Always use the example: if you've got a 5-year-old couch and you lose it in a fire, they're not going to pay you. If you don't have replacement costs, you're going to get paid what a 5-year-old couch was. So let's just say that maybe you bought the couch for $2,000. Well, 5 years later, it might be worth a couple $100. You don't want to get a couple $100 for a couch. You're going to have to go spend $2,000 to replace. So you want to make sure that's the same. So the way a deductible would work, let's just say when everything was over with, you had that fire in your house and wound up being $60,000 worth of stuff was lost. And you had a $2,500 deductible, which is a pretty standard deductible now. So they would pay the $60,000. They would take out the $2,500, and so the total amount they would pay you would be $57,500. And typically, when that happens, they're paying that out over time. It'll take, because as you claim things, as you report things, they'll keep giving you different checks for the things that you're claiming at that time.
Now, when you're going through this with your deductible, does it work different if you have a mortgage? Does your mortgage company have to basically approve or sign off on these checks as you're going through this claims process?
Yes, because technically they have a lien. They're a lien holder on your house. So yeah, you typically have to go through them. And the reason you have to do that a lot of times, the mortgage companies really they want to make sure that work gets done because they got the lien on the house, and there have been cases in the past where sometimes people get a big check from the insurance company and they don't get the work done. So the mortgage company definitely wants to have a vested interest in making sure that gets done.